Under the Nigeria Tax Administration Act 2025, every company is required to file a self-assessment return. The deadline as follows. If you have not seen part 1 of this series, I advise that you watch the first part so that you would understand better what we're discussing in the second part. So head over to our YouTube channel at TaxStream to see the first video. Now we're going to talk about how to compute your total profit and loss relief for CIT purposes. Your total profit means the total accessible profit from all sources as a business, including chargeable gains that you make when you sell an asset for a gain. After deducting your losses and your capital allowances, that's how you arrive at accessible profit. Now here is how the computation works. You start with your profit before tax, which is based on your profit and loss account when you've done your books, your accounting. You deduct allowable expenses, which we discussed in the first part. You add back non-allowable expenses, which again we discussed in the first part, to arrive at your accessible profit. Then you deduct any losses brought forward from previous years, and then you deduct capital allowances discussed in the first part. Now this will then result in your total profit, which is the figure that you now calculate your tax on. For loss relief, where a company incurs loss in any financial year, that loss may be carried forward and set off against the profits of subsequent years until those losses fully recouped. There is no time limit on the carry forward of losses. However, losses can only be set off against the same trade or business that generated the losses. So losses, for instance, losses from digital assets can only be offset against income from digital assets transactions. You can't claim losses from digital asset transactions from non-digital asset transactions. Let's talk about filing requirements, deadlines, and books of account. Filing first. Under the Nigeria Tax Administration Act 2025, every company is required to file a self-assessment return. The deadline as follows. If you're an existing company, returns must be filed within 6 months after the end of your financial year. So let's take, for instance, your financial year end is December 2025. It means that you must file your CIT returns by 30th of June 2026. For newly incorporated companies, the deadline is 18 months from the date of your incorporation as a business, or 6 months after your first accounting period, whichever comes earlier. And if a company ceases operations, it has to file a notice of cessation with the NRS within 6 months of ceasing to do business. Now let's talk about what you should file. The tax returns must be accompanied by audited financial statements, which include your statement of profit and loss, your statement of financial position, a cash flow statement, notes to your account, the auditor's report, and also your tax calculation. But very interestingly, there is an important concession that has been granted to small companies. A small company, which of course, like we said, is a company that has turnover less than 100 million in a year, or total asset less than 250 million in a year, is not required to submit audited financial statements. Instead, it may file something called a statement of account, which it prepares as by itself and attests to it. And this significantly helps reduce the cost of compliance for small businesses. Again, there's something called books of account. Under the Nigeria Tax Administration Act, every company is required to maintain books of accounts in English language containing sufficient information for the accurate ascertainment of their tax liability. And these records must be kept for a minimum of 6 years. There is a penalty for failing to keep your records, and this is 50,000 naira for not keeping accurate records. Let's head over to penalties and interest. Non-compliance carries real financial consequences. Failure to register with the Nigeria Revenue Service attracts a penalty of 50,000 for the first month and 25,000 naira for every subsequent month the default continues. But today, registration is so simple. You can do it on something called Rev360, the new platform, and we've done a separate video to show you how to register on Rev360. Also, failure to file your returns attract penalty of 100,000 naira for the first month and 50,000 naira for every subsequent month. And remember, we had said you file your returns within 6 months after your financial year end. Now, let's talk about when you should pay your taxes. Where tax is assessed and is not paid by the due date, a penalty of 10% of the tax due is imposed, plus interest at the Central Bank of Nigeria monetary policy rate, plus a spread that the Minister of Finance will determine. If the tax is in foreign currency and you don't pay on time, there's going to be interest at something called the SOFR rate and a spread which the minister will determine. And this applies until the liability is settled. These are not trivial matters. So over time, you find out that if you don't pay the taxes on time, the penalty and the interest would even exceed the actual tax itself, which is why proactive compliance is far far cheaper than reactive firefighting, trying to solve reactively. Now let's talk about common compliance mistakes and how TaxStream helps businesses. Before we close, let me highlight a few things that businesses do wrongly and how we can help them at tax. First, failing to register on time. Many companies operate for months, even years, without registering for taxes, and they keep accumulating penalties from day one. Second, missing filing deadlines, either because the business does not track its year end properly or because it waits until the last minute to prepare financial statements. Third, not keeping books of account or preparing financial statements for tax filing. Fourth, claiming non-allowable deductions, particularly personal expenses, mostly because such companies do not separate their business account from their personal account, and they now try to claim personal expenses from business, which is not allowable. Fifth, misclassifying assets for capital allowance purposes, which again leads to incorrect deduction claims. Sixth, failing to carry losses forward properly and losing the losses relief that the company would have been entitled to. And this is where TaxStream comes in. TaxStream is an AI-powered technology platform purpose-built to help Nigerian businesses manage their tax compliance seamlessly. From automated filing reminders and deadline tracking to automated bookkeeping to automated CIT computation, deduction classification, capital allowance computation, and penalties exposure analysis, TaxStream takes the complexity out of compliance so that you can focus on growing your business. So whether you're a small company filing a statement of account or you're a large enterprise managing multiple tax obligations, TaxStream gives you the tools and the confidence to get it right every single time. So that's our comprehensive overview of the company's income tax regime in Nigeria. Remember, CIT is not something to fear. It is something to understand, plan for, and manage intelligently. If you found this video helpful, please subscribe and share the video with your network. And for more expert content like this, visit our website www.taxstream.com to explore a full range of our resources on our blog. Thank you.